What up traders, what up investors, Ken here from Dyslexic Investor, and thank you for tuning in for another fantastic video. Today we're going to be looking at Google. Yes, ticker symbol GOOGL. This is going to be the stock that we saw a enormous amount of large open interest going out. We're going to jump into that in just a second. But looking here again, if you're not familiar with Google, they do all this fun stuff. Of course, if we just do a quick little Google search of like, it's kind of been going a little bit sideways on the chart, but it's a very interesting activity. It's part of the FANG group, which a lot of people are talking about, and it's currently getting somewhat scrutinized and from the EU and so forth about some antitrust and whatever blah, 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 blah stuff. I'm not trying to peruse over that, but they always get their hand in some kind of cookie jar and there's someone's trying to slap their hand every once in a while. So the options activity that we're looking at is all the way out into February. So it's going to be the February 19th of 2021. Someone bought 300 contracts, okay? 300 contracts at the 1550 strike price. So that's going to be a very, very deep in the money contract. That contract itself is $247. So basically it's 24, almost $25,000 per contract, and they bought 300 of them. So what does that equate to? Just a nice bet of $7.4 million for Google to potentially move higher into February. Again, full disclosure, we don't know if this individual is trying to hedge a bet or anything like that. Is this just going to be rolling the dice? We don't know, but this is a pretty large amount of money going into one particular stock as well. Again, we have some larger other bets that were placed just yesterday, but they're a little bit more short dated. We have like the December contract, we have some November 20th, the December 18th with this next month's expiration, some stuff going out, but it's kind of strange on seeing a very large amount just out of nowhere with no other stipulations behind it, just insinuating and speculating, keyword speculating on this particular move. So let's go ahead and just jump into the chart. So this, again, ticker symbol alphabet, which is all GOOGL. We're looking here on the weekly chart to kind of really sum things up here initially. This is a weekly chart that goes back 3 years. And you can kind of see these sways back and forth, these waves. Of course, we had the huge sell-off just this year, but a lot of stocks, as you know, have really rebounded and just have given back much more. With that being said, we're seeing this pattern still continue. These basically riding the waves of the ocean of the stock market and just seeing these plays out. Of course, we had that larger pullback just a couple weeks ago, but now we are hitting a very key level, which kind of got on my radar. When it hit this level, I was waiting for some little bit of a pullback, and it's looking like there are some larger traders already buying into this potential retracement. Again, we're hitting that previous low here around that 1526. Of course, the traders are buying the 1550 strike price. So again, that's going to be a deep in the money call. So we can show that here on the February timeframe. So it was the 1550 right here, and you can see that large open interest there, kind of insinuating that was a buy. Again, this was yesterday. We're doing the AM of Friday, so this happened yesterday. This large execution came in since it moved from the volume tab to the open interest tab, meaning that was a buy. So that was going to be insinuating a very large order. We also see a lot of open interest around the 1500. That's more or less just going to be a very common number. Again, it's a very nice round number. It's very deep in the money. So it basically is going to be trading in tandem or in correlation with the Google stock. So if Google moves up 1 point, this will move up at a very nice percentage as well. Not as fast as these out of the monies, but again, these out of the monies don't really hold much value, and the premium will decay with time. Again, this option is about 90 days out, so the theta is still somewhat not the most relevant until it hits about 45 to 30, but always got to be worried about theta decay. I really like this play, especially it being out a couple months, giving it some time. It's deeper in the money. It's a really nice play potentially. So what are we looking for here with Google? So initial support Short-term support is going to be kind of coming in around the 1656. That's going to be the 8 EMA on the weekly side. So we got to move to the daily chart here. We're kind of seeing that kind of lines up with something. Guess what that lines up with? That kind of lines up with the 21 EMA. And you know that if you watch the channel, we love that 21 EMA. So the 21 EMA, the parabolic SAR dots are all showing stronger support here around 16, let's just call it like 1700. Again, this is not a science. This is just more or less just this using some statistics with probabilities. But if it does break the 21, that we have another strong support around the 1656. So that was the initial time we just talked about on the weekly chart, which was actually the 8 EMA on the weekly side, which is the 34 EMA on the daily side. So potentially, as I say to my Patreon and my YouTube members, I'm usually always early to get into stocks, and sometimes I have to pay a little bit of price for it because I get bounced around before we get the initial move. I think if we get any kind of pullback, that we could kind of potentially bounce off this level here around 1700, even down to around that 1650, 1660 potentially. But that being said, those are some initial shorter dated supports. But what are we looking for? Potential goals. For targets to the upside on being more of a bull on this market. Because again, stocks only go up, right, guys? Nervous laugh. Looking for the 1813, which is its previous high there. Then we're looking for the initial target. The real target that we're looking for is 1926, or basically the 1920 level, to potentially hit those targets within the near term. Again, potentially, if we get a huge, they do a Santa Claus rally, the Christmas rally, the holiday rally, all this kind of stuff could potentially put us up to that level by the end of the year. That's about 35 days out or something. That's not unreasonable, but with this large, great quarter, it's got a lot of momentum behind it, and we start seeing some larger executions of trades going out. This is something very much capable that Google can continue to run here. But again, keeping it on somewhat of a short string because that contract is very large. And looking for these initial supports to kind of potentially hold on these moving averages and these Fibonacci numbers that line up with those numbers. Again, key takeaways, looking for 1926 to 1900 plus in the short term, meaning at least 30 to 40 days out, that we're going to be looking for these price targets. Because again, so how we can look at that, so let's look up Tastyworks. And again, that is the platform that I use for trading, and I completely love. Again, if you want to support the channel, got the affiliate link down below, folks. So how do you know on what the move could be? So the February move, they're saying in February they're saying a plus or minus move of $200. You can see that on the top right corner here. So a move of $200. $200 where we're currently trading is around 1750. That kind of puts it up to that 1950 level, potentially. Again, if it's a huge bull market and it's a run and we're dancing into the new year in the Christmas holiday season, this can easily run up higher and really get some large move. Just into the last week of December, they're saying a move of $120. So again, that's still going to put it just slightly below that number we talked about around 1900 to potentially get that target hit by the end of the year. So this is just kind of keep things in mind, like how crazy, like I wouldn't expect, like this is where like the YOLO trades kind of come in, where someone's like, excuse me, like, oh, Ken said it's going to hit $2,000. I said potentially. Again, I don't have a crystal ball here. So you just go out here and you buy the $2,000 strike price for February. Yes, it's substantially cheaper. It's only $2,600 compared to what this call up here is. Again, I don't expect a lot of people to afford that call. You're better off just buying 1 or 2 shares of the stock if you really want to play it in that way, or buy something a little bit closer to in the money, maybe even doing a spread of some kind. So you can do like let me get rid of this one. You can buy like the slightly in the money or at the money and then buy this. Again, it's still a reduction here. You're basically kind of giving yourself a little bit of time here to really potentially have this play out. Again, it's still Google's not a cheap stock. That's the only problem, and I think the hedge fund managers and things like that really know that, and they're buying these really expensive calls that. Let's be honest, the folks that you and I can't really afford. Again, we can buy them, but then it's going to be taking up like 25-30% of our account, and that's going to be a little bit dangerous on a particular 90-day call going forth. But so going back to the example of buying like the 2000, so you're like, oh, okay, it's not that crazy. It's a $2,600, blah blah blah. But you're saying your probability of profit is 18%. The probability of profit of 50% is 62. So that's actually not a bad number. But the only reason it gives it a P50 of 62 is that because it's 90 days out. And the options market, the markets makers are skewing it potentially with a very large range of $205, because again, Tastyworks and then also Thinkorswim do two different things. So we can go here. What are they saying? They're saying $228 range. So Tastyworks is usually a little bit more aggressive on their moving averages, and Thinkorswim is usually a little bit more loosey goosey and gives it a little bit of wider band. So we just do it in between. We're saying like 210 to 212 range, potentially, to see this potentially move. Could it hit 2000? I'm not saying it can't, but I'm saying you want to give yourself the best probability of profit, the best outcome to potentially trade this, and just be very careful on the risks that you take, especially with options. This blessing of buying the $2,000 call, it's going to be very hard because again, it's out of the money. It's within the deviation channel. Again, you can see it's right above the deviation. Again, what the expected move could be on the deviation channel, but just be very mindful out there, folks, and be careful when you're trading options, and make sure that you do your due diligence and cut losses fast, potentially. All right, guys, thank you again for coming out. Please don't forget to like and subscribe. Again, this is Ken from the Dyslexic Investor, and I'll catch you guys on the flip side. Peace.